Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. Euro-dollar, a second bullish white soldier yesterday and the highest close since the 1st of January. The market drove higher up over the 50% Fibonacci line of the January 2021 to September 22 move at 109.44, over the bright red upper time, currently at 109.79, of the mid-April to early June shallowly bullish shift pitchfork, and finally just over the very important dark blue July 2017 to November 2018 head and shoulders neckline, currently at 109.95. But the market did not manage to close over the neckline. However, it was very close in doing so. So it has become obvious, excuse me, that this dark blue neckline is the key nearby resistance. Beyond this, we have little in the way until the December 2023 high at 111.39, except for one thing. That thing is the target X at 110.40. This is the combined target for the late June to date bullish halfway hesitation and the smaller last 2-week-old bullish halfway hesitation. So far today, a significant move higher over the dark blue head and shoulders neckline and into highs not seen since the very start of this year. Cable, aka sterling against the US dollar. A fourth bullish white soldier yesterday and also a bullish long white Mariposa, coming after the combined key reversal up and bullish closing white Mariposa seen on Thursday last week. Prices pushed up over and closed over a number of significant levels. Firstly, and notably, it was over the dark blue upper trend line, currently at 127.71 of the mid-July to date bear channel. The next was back within the mid-April to late June bullish shift pitchfork, specifically over the lower time, currently at 128.34. And finally over, if only just, the November 2020 low at 128.52. Now, if I go back for a moment to the bear channel, the break higher has a target X in the 129.35 area. So all this looks very interesting on the upside. But it needs prices to stabilize over all three of these resistances that are now in the process of being converted into supports. Looking further up, beyond target X at 129.35, we have the middle time, currently at 129.96 of the broken bullish shift pitchfork. Now, so far today, a higher open, but a pullback down below the November 2020 low and testing the lower time of the broken bullish shift pitchfork. Euro sterling, an immediate countering bearish engulfing pattern yesterday, if only just. The most important feature was the close below both the declining long moving average, currently at 85.51, and the important combined support and now possible combined resistance being built up at the combined lows of December 2022 at 85.45 and December 23 at 85.47. Further down, and yesterday's action, specifically the low, and how the market just managed to shy away from it, is the bright red neckline, currently at 85.23 of the May to August 2022 head and shoulders continuation pattern. Additionally, just below this, we have the flatlining medium moving average, currently at 85.09. We're interested to see how the market handles ventures below the combined lows. So far today, well, it handled it pretty interestingly. A strong move higher over the combined lows at 85.45 and 85.47 and well over the declining long moving average, making new highs for this week. US dollar against the Japanese yen. A counter to the counter bearish harami, if only just yesterday. Prices tried for another session up towards the lesser Fibonacci line at 148.68 and yet again rejected it. However, the dip down to the lesser Fibonacci level below at 146.69 also failed, penetrating it but not closing below it. Further afield, we have overhead resistance at the 50% Fibonacci line of the July 23 to July 24 move at 149.61. Then the broken purple lower time, currently at 150.12, of the February 2022 to January 2023 bullish shift pitch fork. Then the gold long moving average, currently at 151.40. Looking below, well, there's not much until the 50% Fibonacci line of the January 23 to July 24 move at 144.58. On top of all this is the shadow cast of last month's key reversal down. Now, so far today, a dip below the lesser Fibonacci line at 146.69, but a strong reactionary move back up right now. It's all very interesting. US dollar against the CNH, the offshore Chinese yuan. A strong reactionary bearish long black Marobozo yesterday after the previous session's immediate countering bullish harami. It was only just. The market punched down through and closed below the recent supportive lesser Fibonacci line at 716.95. The topside resistance was again avoided at the combination of the May 2020 high at 719.64 and the very recent 50% Fibonacci line at 719.65. Looking below, we have limited support until the lesser Fibonacci line at 711.61, but I doubt if it is really robust. I think you'd have to look down at the low of 708.22 if this market really starts moving lower. All of this is in the shadow of last month's monthly key reversal down. Now, so far today, a small move lower, quickly aborted, as was the small move higher, such that we are roughly back where we started, around last night's close. US dollar against the Mexican peso. An immediate countering bearish dark cloud cover pattern yesterday after the previous session's bullish engulfing pattern. The market is currently trapped in between combined overhead resistances from March 2020 low at 1915.03 and the 50% Fibonacci line of the November 2020 April 2024 move at 1920.38, and below by congestion at 1885.40 and 1879.15. In the overall picture, we remain within the bright red mid-May to mid-July bullish shift pitch fork, but we're right now in between the overhead middle time, currently at 1925.44, and the lower time below, currently at 1824.19. Additionally, the short medium moving average is currently at 1831.14, is nearby, just above the lower time. Now, so far today, a small higher open, but then a larger move lower. However, prices are still caught between the overhead resistances at 1915.03 and 1920.38, and by the supports below at 1885.40 and 1879.15. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.